MPW just released earnings where they beat on EPS and revenue, which may sound very promising, but keep in mind that US revenue is still down 46% year over year. But still, investors seem to like the update, since the stock went up a whopping 5% as a result today. And I have to admit that I was very skeptical about this stock. So let's see what the earnings shows us and if MPW stock is a buy at current prices. Right off the bat we see that revenue was reported at 231 million. And on the 12-month result we see some decent growth numbers as well. Looking at the expenses we see that this number is going down, so we're off to a great start. And down the line, net loss is still not looking any good, but it has to be said that on the 3-month period it is recovering year over year. Dividends were slashed in the past couple of years, but this 8-cent dividend is easily covered with the $0.18 normalized FFO per share, so that is looking pretty decent. Funds from operations also seems to recover a little bit here. Looking at one of the most important numbers for me when looking at REITs, the net debt to EBITDA, I get worried a little bit. I prefer a range of 5 to 6.5, and in the case of MPW and the situation they are in, I think I can live with a 7. But 9.3 is way too high in my opinion, so let's keep our eye on this number. Interest coverage ratio is looking pretty good at 2.2 times. Looking at the portfolio we see that acute care hospitals is the biggest segment with 59%, which is also the revenue share. Behavioral health facilities and post-acute care are significantly smaller, but also have a good revenue share in my opinion. Circle Health is by far the biggest operator, representing 22% of the revenue, which is a big concern to me. And if history taught us one thing with MPW, is that diversification is key, especially with these type of companies. Hence why I prefer a maximum of 10% here. So this is also not looking any good. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. MPW is a 3 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. However, the problem with MPW is that the 12 trailing FFO is at a negative, so we can't come up with the price to FFO here, which is a big red flag to me and not a great start. Later in this video I will show you my 3 price targets for MPW stock, so make sure to watch until the end. Revenue is at 641 million, and in this graph we see that revenue used to go up, but it is coming down big time lately. We saw in the 12-month period it is actually increasing a bit again, but it is still not looking fantastic for the company. We see that margins jumped off a cliff as well. Both the operating margin and net margin are at a negative. The positive part is that gross margin increased a little bit lately. EPS is pretty much the same story as the revenue and the margins. For REITs it's always a bit diluting, but this trend is something that I really don't like. Analysis have mixed feelings about the future of the company in terms of EPS. For the year of 2025 they expect a big increase, but in 2026 it is looking way different with a decline in EPS. And for the revenue it is not looking any better, with analysis expecting decreases in the coming years. Return on assets is sitting at minus 16%, which is a really bad number. Return on equity is looking really bad. And the most important number, return on invested capital, is sitting at 0.4%, which is a low number. It is also lower versus the 5-year average, so that's also something that I don't like. Current ratio is at 2.38, which is a decent number, so this is actually recovering a little bit lately. And right now, MPW has 9.2 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. MPW has 275 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like, especially in combination with the net debt to EBITDA. Looking at the total debt to equity, we see that this number is reported at nearly 170%. Meanwhile, the REIT industry averages are much lower, especially the one for healthcare facilities, at 1.11, so that's something to keep our eye on. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. And to be honest, this surprised me a little bit. But ever since 2021 it is decreasing again, so keep your eye on these numbers as well. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. However, in the recent years they didn't really increase shares, which is very interesting. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, this is where things get really interesting. MPW is known for paying a dividend yield around 15% in the past few years. In the recent quarters, they cut the dividend multiple times. However, even with the dividend cuts happening, MPW still has a juicy 6.7% dividend yield, paying you $0.32 annually per share. Payout ratio is finally at a healthy ratio, sitting at 62%, below the 75% average for REITs. The 5-year growth rate is at a negative due to the dividend cuts, hence why there's also no dividend streak. In this graph we see the dividends paid by MPW in the past 10 years. They used to increase the dividends at a pretty decent rate. However, as told multiple times now, they cut the dividends more than once in the recent years. Looking at the dividend estimates, we see that it is expected to stay where it is right now. And I don't think that is a bad thing given their situation. And with that being said, how about the historical returns? Was there any value in holding MPW over the past couple of years? I decided to compare MPW stock with the overall market, in this case the S&P 500. And I think this says it all in my opinion. On the 5-year chart we see that MPW underperformed the S&P 500 big time, with a minus 64% return including dividends. The S&P 500 is sitting at 116% return. And they were never able to outperform the S&P 500 for only a short period. However, here is where things get really interesting. On the 1-year chart it looks completely different, with MPW at a 37% return. The S&P 500 is sitting at 19% return, so they are crushing the S&P 500. On the 6-month chart it is also looking pretty good, with 18% return for MPW. Meanwhile, the S&P 500 is sitting at 7%. On the 1-month chart it is again MPW that is beating the S&P 500, with a 5% return versus a 0% return for the S&P 500. And this is also driven by today's earnings release. So bottom line, MPW underperformed the S&P 500 in the long run, but in the short run it seems to find some momentum. So could this be the perfect time to buy MPW stock? Well, let's check the 3 price targets that I created using the Everythingmoney software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 12, 14 and 16%. And for the free cash flow margin I'm putting in 52, 54 and 56%. For the PE ratio I'm putting in 20, and for the price of free cash flow I'm putting in 7, 8 and 9. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. And right now MPW stock is at $5. I hit analyze, and we still see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $3.6. We have a mid price target of roughly $4.4, and we have a high price target of $5.3. And to me, the mid price target is the most justified here, indicating that this stock is overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on MPW is that they are showing signs of recovery, but they still have a long way to go. The company is really struggling in terms of revenue, margins, debt, funds from operations, and in the end the previous dividend cuts are a result of that. And without doubt the MPW videos on the channel are the most popular, and I analyze this company every quarter at least once. But it again feels like the same conclusion. Even though the company is showing signs of recovery, they are still miles away from being a steady investment. From a valuation point of view, it still doesn't look any good, and the total returns kinda says it all for the stock. Don't buy MPW stock if you want to get steady and consistent returns. Yes, the 6.7% dividend yield may look attractive, but they have cut the dividends multiple times now and the company is still in a really bad shape. So please be careful when you decide to buy this stock. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.